All right, let's rock and roll. All right, so this is not necessarily a video about this guy, but he highlights the point of what the problem is on this platform and why so many people have been led astray. So look, I'm all down for finding folks that can teach you and help you learn. Yes, I am a licensed professional in the industry, Series 6 and 63. Don't forget to check out your favorite professionals on brokercheck.finra.org, where you can find out what licenses they carry and what, if any, disclosures they've had, who they work for, all that good stuff. So I'm on there. This guy is not. All right, so he did a video about where he's gone wrong over the last... let me backtrack. Okay, so I float around on YouTube sometimes, and I like to kind of get... Really, I do this to find out a couple of things. I try to get investor sentiment. These channels are a good source of investor sentiment. And the other thing is, every once in a while, sometimes somebody will say something, and I'll think, I haven't thought of that before. However, when I would watch most of these channels, when I'd get done watching them, I would think, okay, I've been licensed in the industry for 20 years, and either I have absolutely no idea what I'm doing, or they don't. And since I've been licensed for 20 years, and in my second real bear market as a professional, I'm venturing to guess that they are the ones that don't know what they're talking about. So anyway, he goes on to chat about what he's doing wrong. Now, keep in mind, this guy has got like an entire, albeit I think virtually illegal, operation going on where he sells courses, and he's supposed to be this advisor. He's got a Discord group that you pay to get into, and he is supposed to be this financial YouTube genius. And he is asking for help from his community to hold him accountable on his stock picks. Now, this actually does a couple things. Number one, it absolutely ruins your credibility as any kind of a stock picker or financial guru. If I have to ask my clients to hold me accountable to my portfolio, then I'm not doing my job right. Now, I want them to hold me accountable to their portfolio. That's different. Holding me accountable to their portfolio, because it is their portfolio after all. So anyway, what these guys are absolutely missing 100% is, well, there's a couple things. Actually, it's like 700 or 800. And actually, it's more like a couple thousand. You know what? They're missing a lot of things from their financial advice that really they are not allowed to be giving, since they hold no licenses with FINRA. You can go check it out, but they don't hold any licenses with FINRA. First and foremost, they completely ignore macroeconomic signals. They look at them, but they don't find out where they're going in terms of how it affects their investment portfolio and things that they're looking at. Number two is risk management. This is very, very important. As someone who has played in the game like this gentleman, unlicensed, and played in the game licensed, there is a vastly different view of risk management, and you play things a little bit differently when you look at risk management. And there are several things you have to consider in terms of your own risk management. And there's all kinds of different risks. So if you're going to be doing any kind of investing, you're going to have risk. The question is, which risk are you most comfortable handling? Is it market risk? Is it currency risk? Is it political risk? Business risk? Default risk? Inflation? Interest rate? Liquidity? Mortgage? Opportunity risk? Look, you're going to have, no matter where your money is, you're going to be playing at some sort of risk level. A lot of people think when they put their money in a savings account, they're like, that's a safe place. There's no risk. Well, no, there is, because your savings account is paying a measly, maybe 1 or 2% interest rate now on your deposit. You are still playing with inflation risk. That's the risk you're taking on, is that you're going to lose purchasing power with your money. So which one do you want to handle? Now, this guy here, he charges several $1,000s for a course, but I'm going to give you guys a little secret. There's a little website here that you can go to for free called investopedia.com. And you can type in anything into this website and it will give you a wealth of resources. So I just happened to put in low risk versus high risk for this particular scenario that we're pulling out tonight, just what we're looking at. So low risk is basically, when they talk about low risk versus high risk, it's talking about the amount of risk, the fundamentals to investing, not really about returns, could be about returns, but it's just really about how much of that money are you going to get back versus it's a volatility thing, right? How volatile is your money going to be? Words are freaking hard tonight. Wow. High risk investments are more volatile. So low risk investments might be something like a bond fund or a bond. An I bond with the U.S. government is a low risk vehicle. A high risk investment would be a penny stock. Some stock trading below $1 that you think is the next Tesla. That would be high risk. And you can really input into this little search bar up here, and you could look at any of these. So we're going to look at market risk. We'll just kind of scroll down through some of these. Market risk. Definition. How to deal with market risk. So you can look this up. So you can go through every single risk level and look at what they are. So market risk is the possibility that an individual or other entity will experience losses due to factors that affect the overall performance in the financial markets. So market risk is your ups and downs, your day-to-day moves in the stock market. That's the skinny of it. And then let's go ahead and do. We'll just kind of go down the chart here. Currency risk. What do we got? Should we just go with the definition? We should probably just go with the definition. Currency risk definition. And there's a lot of things that you can do in a portfolio to mitigate this risk. Now, if you're investing outside of any sort of an advisory service, you are going to have to manage your own risk. If you are investing inside of an advisory service, if you're using an advisor, if you're investing in mutual funds, those mutual fund managers and advisors are managing your risk for you, which is why when you sit down with someone or somebody asks me over one of the apps, hey, what do I do with my money? That's why I can't help you, because I need to figure out which one of these risk factors you are most comfortable handling. Because as part of what I'm going to do for someone and what someone else like me is going to do for someone, whether you're an advisor, a Series 6 rep, a 7 rep, doesn't matter. You're going to be helping someone manage their risk, and you're helping them build a portfolio. Part of building a portfolio is managing risk. Currency risk, commonly referred to as exchange rate risk, arises from the change in price of one currency in relation to another. So if you're investing in a foreign company, then one of the things that you have to take into consideration is currency risk. How volatile is that currency going to be, and how will it affect your investment? These are all things that are really, really important. And then with that, you also have another level of that, which is political risk. Man, excuse me. Political risk. So, political risk is very simply just the risk of that investment's return can suffer as a result of political changes or instability. If you're investing in a company that is rooted in, say, China, you are susceptible to a lot of the political risk that happens over there. So that is something that you have to consider. Those are really just kind of the ones I wanted to look at. So, yeah, but that's one of the things. This is one of the things that's just vastly missed all over YouTube by the YouTube by the YouTube financial gurus is risk. How much risk are you willing to take on? And that is not, I have not seen that addressed in any of their videos. And now that if any of them see this, of course, they're going to address it in their videos because I am small potatoes. I am only 228 followers. They have hundreds of thousands. So anyway, if you see them using any of this information, because I have not seen them address this at all, be sure to throw in their comments where you heard it at first. Let's see if I want to take a look at any of these. Oh, liquidity risk is a good one. So you can actually look up anything. Actually, let's do this. Let's look up liquidity risk. If anybody's got any questions, just go ahead and throw them in the chat and we'll address them. So liquidity risk is making sure that companies, usually this applies to financial institutions, but it can also apply to other companies as well. Just making sure that there's enough cash on hand for them to be able to pay their bills, making sure that they have enough revenue. So liquidity risk is really understated for a lot of well, when you're looking at investments, it's just understated. Most people don't think about it. Let's go to one of my favorite ones here is, well, let's go to the investment advisor at $19.40. This is my favorite act that I think most of YouTube is. No, that's not the act. I want the actual act. I guess they're not going to put the act on here. I thought they did. Anyway, and we'll go financial advisor definition. Maybe that'll have it in here. Yeah, here we go. Financial advisor is a professional who provides expertise for clients, decisions around money matters, personal finances, and investments. So a lot of what these guys are providing is right there in the very first line of what is a financial advisor. That is legally what a financial advisor is, and receives compensation. So it's really important to understand what this is to know what's really going on out on social media. Financial advisors may work as independent agents, or they may be employed by a larger firm. That doesn't really matter with what they're doing. Registered advisors must pass one or more exams and be properly licensed in order to carry out businesses with clients. So they're actually advising people on how to invest their money, and they are not properly licensed. And we need to put a stop to this. As I'm getting off on my rant and tangent and tirade here, because I'm just, I have to go through a lot of training to be able to advise people on investments. Unlike stockbrokers who simply execute orders in the market, financial advisors provide guidance and make informed decisions on behalf of their clients. Financial advisors' pay can be based on a fee, commissions, profit percentage structure, or a combination of thereof. So anyway, this is just kind of an outline. I really just wanted to get into risk management and how it's just so badly ignored on social media. And the only time you're really going to get it is if you sit down with a true professional and when I don't necessarily mean licensed. I mean, they could have formerly been licensed, but somebody who understands risk and how to build a portfolio. So anyway, that is all I got for this one. And we will come back another time and do another video. Who knows what it'll be about? I kind of just float and do whatever I feel like doing on here. I don't necessarily have a plan for YouTube at this point. So anyway, everybody have a good night, good day, whenever you're seeing this, and Frazzled Dad out.